would love to sort of get for the listeners, get an intro on Easy and get an intro on Nico. Let's start with you, Nico, and then we'll get to Andrew. And we'll talk all things payments and why payments is a fundamental thing that we all need, really, and why it should evolve, especially on a public blockchain.
Sure. Well, where Easy started was this idea that, well, to go back a step here, Andrew and I started off as competitors in the deep-end space. And we were building up products and networks that were deploying like Helium cell phone infrastructure equipment throughout the country. And we kept on running into problems with third-party payment gateways when it came to paying out counterparties and importantly, like not getting charged an arm and a leg for the privilege of being able to send out payments when, where, and how our customers wanted. We realized as we were talking to our customers that, I mean, generally these individuals were 55 years of age and older, and so they didn't know anything about crypto. But when we were talking with them, we saw so many of the things that we talk about when it comes to like own your own payment stack, own your own money, and earn on your money passively in ways that like a bank won't give you. These things resonated with them. And when we told them about like the ways that we were able to, whether it was extract yield or to send payments instantly globally for free using stablecoins, their eyes lit up. And so we realized that, there's an opportunity here to bridge the user experience between what people are used to in traditional payments and traditional finance and what people should be used to when it comes to crypto enabled and crypto powered on-chain payments. The one thing we kind of settle on and we talk about is that, we think that if you are running a business and you are operating as an entrepreneur, first of all, this is an incredibly difficult decision you made to do that. You're making a huge bet on yourself. And the last thing you need at the end of the day is some algorithmically dictated third party telling you where you can and can't send your money, when you can get your money, when you can't get your money, and telling you how to run your business in a way that it doesn't understand. In the United States, as you're probably well aware, you have no right to a bank account, and you are not entitled to any form of bank account, and subsequently, the same holds true with payments, and the same holds true with processing payments. Um, we don't think that's right. So our goal here is to really live up to our name and to make payments easy for merchants and for businesses, and to use all the efficiencies behind stablecoins, yield aggregation, uh, and DeFi to make life easier for the average merchant.
Amazing. By the way, I had no idea that you didn't have a right to a bank account in the United States.
I mean, think about it. Like, where in the world do you have the right to go have a bank account? Like the whole that was one of the big complaints about that whole Operation Choke Point 1.0 and 2.0 about people getting debanked without being able to ask about it, right?
right.
It wasn't
The
a
idea
supposition; it was true.
it is so incredible that this is not a common knowledge. I mean, I imagine, like, when I opened my bank account, for that matter, when I opened my daughter's bank account, that it was just an easy thing to kind of walk into a bank and open a bank account. It was sort of like
Yep.
it's a very normal thing to do in the U.S. Perhaps still not normal in the U.S. So this is a lesson learned.
Well,
I mean,
Manish, let
even
me
if you
give you a
think,
quick example here. Like, easy, if I can say it started from any one place, it started from anger. Andrew and I, we had, when we first started working together, when we incorporated Easy, we opened up a PayPal account and we went through, like, I mean, this is a legally structured company. We gave PayPal all of our KYB information. And we were processing a check, a payment from a customer of ours to onboard and pay for some developers for development services. It's a $15,000 check, and we were sending it from one party to another party. PayPal told us, hey, we don't, even though we have all your KYB information and your legal documents and your IDs and everything about you, by the way, we're not going to be processing this transaction for 120 days. We're going to hold on to your money for 120 days, and you can't do anything about it. Oh, and it's going to cost you $700 to do this. So, like, that interaction and that experience is kind of what led us down the pathway we're at today, because we realized that just like in crypto, not your wallet, not your keys, not your tokens. It's the same thing with traditional finance and banking. If it's not your money, then you've got no sovereignty over it.
Andrew, you were saying something?
Yeah, no, I was just saying, I was just going to add on to that. Yeah, I was basically just going to iterate exactly what Nico said is like, we don't have rights to this stuff. Just like, you know, when you think about just the crypto ethos in general, right? That Nico was talking about, the not your keys, not your coins, right? That's kind of the way that we've built Easy with that in mind from the beginning. We looked at the payment structure, like how these payment companies work currently, and said like let's just try to blend these things, but let's reimagine the way that these things work from the ground up and try to create something that is different than what's actually out there. Like if we could rebuild a payment stack with these new efficient tools, how could we do it in a way that would benefit the businesses that are being served the best, but also do it in a way where I had the control over my own money. I got to make my own decisions, and I got to you know ultimately benefit from my own money that I was bringing in and not necessarily subsidize a bunch of bank shareholders.
Right. Hey, listen, Nico and Andrew, I want to double click on a critical point that you guys sort of both made. So, using your example, now PayPal, keep in mind, started with the same premise, right? You should be able to move money safely and quickly. But the fact that they stopped your payments and there's just all this overhead that's involved. I mean, isn't that a regulatory arbitrage taking shape in on with these payment companies? I mean, whether it's Stripe, whether it's PayPal, whether I mean you go down the list, moving money is still a painful process. And I mean, we have done, we move money for our fund, and I can tell you the amount of contortions that we have to go through to take in USDC and convert that into a USD, which then gets moved over three different banks, two different wires in order to do actual trading. So can you double click on that for me a little bit more? Because that clearly is a pain point that
Mm-hmm.
by now you would hope that we would have solved for, but clearly it's still a issue that needs to be addressed. You guys clearly are leading that effort on blockchain.
Well, look, let's talk about the elephant in the room here, and that is fraud, right? PayPal, Square, Stripe, all these companies started, and specifically PayPal. We don't deny that we're standing on the shoulders of giants with what we're building here and the foundation that they have set. But where we're approaching this problem from a different perspective is through the acquisition of 30 years of technological improvement from the time that PayPal started, and 30 years of regulatory improvement from the time that they have started. The fact of the matter is, most of the complications and the rules in payments have to deal with the fact that people are very creative when it comes to fraud. And people are very creative about finding ways around these legacy systems because these legacy systems are not designed for accountability, they're not designed for composability, and they're not designed for being able to audit transactions in a way that even like something you could do on a public blockchain. When we base the transactions and the transaction ecosystem off of queryable, auditable transactions, like things like chargeback risk drop to zero. Things like fraud when it comes to fraudulent payment types or fraudulent customer types, as long as there's like a proper compliance and KYB setup, these risks they don't hit zero, but they trend towards it in a way that you can't do if you are just an entirely native TradFi based payments company. So I would say that a lot of the inefficiency and a lot of the clunkiness in traditional payment system is owing to the fact that, I mean, take one massive step back. The current payment system, when you, Manish, are sending a payment from one bank account to another bank account, it's written in COBOL and it was coded in 1959. Like it's still this original system is what we're using. It works, it's efficient for what its purpose is. But the point is that we are sitting on a mountain of technical debt that right now the technologies we're building on have an opportunity to kind of get around.
Right. So I mean, so let's move this conversation forward, right? So as you're kind of thinking of the technical stack, Andrew, how does blockchain come into play? Because at the end of the day, you still have to move physical US dollars from the businesses that are currently in the country, right? I mean, everybody's sort of tied to some payment chain or the other, whether you get it from PayPal, whether it's Stripe, whether it's the old school Costco, give me the payment guardrails. How does it work, and how does it all sort of converge onto a public blockchain? What do you need to do in order for that to move
Yeah.
forward?
Yeah, so I mean, it's very similar to the setup that you'd have with like a Stripe or a Square or starting with any of them. We have an application, right, that you fill out just for like a business. Tells the basic information that we need to know because we do, since we are a regulated industry, right, we still have to conduct like these compliance checks on these different companies to account for, money laundering and everything else. But once you have that side done, it's pretty simple. We kind of set up a bit different than most payment companies in the fact that instead of having, say, the normal flow, if you're using a Stripe or a Square, you're processing these transactions under your merchant account. And every day those are settling, and they're settling to your bank account, whichever bank account you kind of connect to it. The difference with Easy is that we actually create self-custodial infrastructure for you when you sign up. So you have your own wallet, your own keys, your own access to it that's kind of built into the Easy platform and abstracted away because most of our clients that we've started with, right, are regular Web2 businesses. So that's all kind of built in. And the difference being that now when somebody is using those tools, right, they're using, say, a credit card, or they're using a bank transfer, or they're using any of these tools, instead of settling that directly to a bank account, we're now minting our own stablecoin and bringing that on-chain directly to their wallet so that they have full control, full capabilities in terms of like yielding or earning on those dollars, while all the underlying fiat is, since it's a federally regulated thing, it's sitting in a trust, right, over collateralized to make sure that, there's always one-to-one with the dollar. But the biggest thing, I guess, for the consumer is that, they are in full control. Nothing happens without their signatures, right? And they're able to now benefit off of it. Having a regular stable coin company, if you look at something like a USDC or a Tether or anything like that, those platforms rely on those treasury bonds and those treasury yields to run a profit. Ourselves, we're still charging, a payment processing fee rate, albeit ours is a bit lower than everybody else's. But those stablecoin companies rely on that yield in order to turn a profit. Since we still already have a fee, we're just using all of those yields generated to give straight back to the customer to reduce the cost of their payments. So if you're looking at something like, what would be on Square, right, for a 2.9% and 30 cents, we're essentially taking all of those digital dollars that you've created in your wallet, taking all the yields and applying it to the payment processing balance at the end, just reducing that rate. So you might be at a 2.5 or a 2.4 or even 2.0, depending on how you move money within your business and how long you keep it in your accounts.
So, putting on my traditional finance hat on, am I hearing it right that effectively you're giving control to the business owner to create their own mini money market accounts?
In a way.
So they get,
Yeah, in a way, yeah. Essentially, like, and the difference being too is the one thing it's interesting about it is since we are charging for for a service, right? We're not necessarily giving a security or anything like that. We're essentially using it as a marketing spend. So
sure.
we look at it as a marketing spend and a rebate, right? And rebate law is as old as they come. But essentially, this is non-taxable income because it is just rebating what they would normally be spending. So for business, it checks off all those boxes, and better yet, it's compliant with new laws like the Genius Act as well.
Yeah, amazing. Nico, when we met you guys in New York, one of the interesting stories that I don't think gets talked a lot about is that you guys are working with the school district, if my memory serves me.
Correct.
Talk about that, because I think it's lost on people that small businesses are the backbone of the country. Schools, are where a lot of people spend their money in buying lunches, perhaps juice boxes, or whatever that's being sold nowadays. But there's a lot of friction. I mean, like I can only imagine what a school that doesn't have any idea how to run a business has
Yeah,
to manage the payment system.
it's not that so much. So basically, where that started from. So for context here, for any of the listeners, we started a pilot test program about a year ago with a food service provision app that helps food service providers and schools. It started with 20 something, now they're up to 41 and growing. But it helps the lunch programs, it helps the food service providers set menus, charge prices, collect payments, and disperse lunches on behalf of 17,000 right now daily students that are getting their lunch payments on that. This was a ideal test case because all of what we talk about is expressed onto one platform, and also it's extremely disarming when you talk about crypto in the context of K through 12 schools and 17,000 kids getting their lunch payments. Because if there's one industry that probably shouldn't be within 100 yards of crypto, it is K through 12 schools. So it's an extremely disarming use case, but as it stands, basically the problem that they were encountering, and like any parent that has kids has probably encountered this in one way or another as well, is that it's in a very limited space. It's captured by a few large players, and the options when it comes to payment processing are extremely expensive. So our client, before we were involved, they were on Square. And if you consider the average cost base of a school lunch at a private school, our client was paying on average, each student was paying on average $8.50 a lunch. Now, at 2.9% and 30 cents a transaction, if you're doing $1,000 transaction, it trends towards 2.9%. But at 8.50, that 30 cents represents a 3.5% of the total on that school lunch. They were paying Square when they started. They were doing 10 million in annualized volume. They paid $620,000 in fees, so 6.2%
Wow.
for like the processing of these payments. Uh, the way that their business worked though was an ideal use case for us because they sat on the money that they were collecting from these schools for on their behalf for 2 weeks. And the reason that they did this is because, there's refunds, there's food spoilage, there's contractual obligations, etc. But for 2 weeks, Square wasn't giving them anything. So we came in and we allowed them to monetize this idle float for that 2 week period of time by putting it in just the US Treasuries. And that 2 week period of time resulted in a 30 basis point average lower fee to this customer, which materialized in the form of $120,000 in savings or 20% on their top line. So changing nothing about their business, changing nothing about how they charge for payments, not changing nothing about the underlying operations, only in their case monetizing their idle float, they were able to save 20% on their card payment costs. And they were an ideal use case for us because, again, like crypto shouldn't be within 100 yards of school kids.
Right. No, I mean, amazing. I mean, the savings is just remarkable. I mean, but from a technology standpoint, Andrew, do you think this is achievable on a traditional technology stack, or do you think blockchain is a perfect purpose-built technology for uh, this sort of business and cost savings and ultimately building a program with money?
No, I mean, if you look at it right now, it's exactly like Nico said before. I think the majority of the U.S. banking system, right, is out of date. It's been out of date for a long time. I think the reason why a lot of it is kept in place is just because they're making money off of it still, right? They're not incentivized to update a lot of these systems because there's no money in really updating them. You know, blockchain providers like blockchain provides essentially like a middleware solution to move merchants to more efficient systems, right? So if we have, you know, we eventually see payments trending down towards zero, right? Like it would cannibalize a lot of the different systems that are actually out there right now, and none of them are incentivized to do that. Eventually, everything will have stable coins, you know, uh, integrated in some point of the stack. So our job isn't to necessarily think about, when or if, right, stablecoins are going to take over. It's more of, for us at least, it's who is going to help in that transition for any of these businesses that don't understand the technology. So we're just trying to make it as easily and accessible to normal businesses, to allow them to use something that feels like the tools that they're already used to, but just much more beneficial for their business.
Right. Look, I mean, I think so. You raise an interesting point that payment infrastructure is going to move over to blockchain and sort of become, because the cost is going to come down to zero. Do you think that's the reason why Stripe is launching their own L1 and clearly Circle, or is it more to sort of keep afloat the valuation of the firms?
I'm not sure on that. I've been watching these things with their own their own chains, and I'm not sure 100% of my conclusion about why they would be doing it right now. It doesn't make sense in certain aspects to me of why they would create their own chain, when they're, the beautiful part about a lot of blockchains is, right, the access to different liquidity and everything else, where now you're essentially just creating a solution, a closed loop, kind of solution on your own rails. I don't get it as much, but I don't know. I think if you look at how Stripe has, with their acquisition of Privy or Bridge or these other blockchain solutions they're doing, you can see exactly how it's benefiting them right now, right? They are able to do cross-border transactions within their own ecosystem for a fraction of what it normally costs with all the traditional based rails and their foreign exchange fees and everything else on top of it. Doing it over blockchain, it saves them a ton of money and it increases their margins. If you look at right now what they're charging for even a stablecoin based payment, I mean, it costs us 9/10 thousandths of a dollar to send a stablecoin based transfer, yet they're charging 1.5% on that, right? And so that's making their margin go up like crazy. So I don't think that, I mean, you can see these companies and it's very validating seeing them starting to use these technologies, but I don't think that ultimately they're going to be, willingly giving those benefits to their customers right away. It's going to take a forcing function from somebody else that's willing to do it in order to make them follow suit.
So given that both our organizations, your Easy Lab and as well as Alpha Ledger is on Solana, we're focused on the Solana ecosystem. How does Solana fit into play, especially as it relates to the payments? Clearly, look, it's one of the fastest chains out there, and there's a lot of support behind that ecosystem. Talk a little bit about that. How are you seeing the support system on Solana compared to these other L1s coming up? And then what should Solana do differently than it does today in order to grow this ecosystem?
I mean, I think if you look at Solana right now, right, it's one of the most performant chains. It's the reasons why you've seen companies like Visa do, do pilot programs on chain and use it. A lot of other chains, they just don't really compare in terms of like speed and efficiency. Some are getting there and some are doing better, but then when you look at the support and the liquidity on chain and the tools available and the developer base, right, then it's a little lacking in one area or another. So, in terms of the Solana ecosystem, there's so many amazing builders everywhere. There's new tools being created every day. And, for us, it was what is going to be the best bang for our buck when it comes to infrastructure? Because right now we're not a multi-chain product. We don't have a need to go to another chain. There's no real reason for us to do that. So we needed what was fast and cheap and, enabled us to do what we wanted to and not become a barrier in terms of technology. So that's why we chose it. And yeah, I mean, it's been fantastic so far, and the tools keep getting better for us to, create new experiences.
I mean, that makes a lot of sense. I mean, the one thing that I'm trying to figure out though is, as you guys sort of build this infrastructure for the payments and you guys start getting into the stable coin, which is effectively a yield-bearing coin for the business owners. How does one tap into your network? What do they have to really do to one come onto your network? And is it only for businesses to utilize Easy services, or can a retail person like me come on board and say, look, I like this idea, I want access to the stable coin, and perhaps stable coin is not even the right terminology over here.
Yeah, sorry, Manish, I lost you on that last little bit. I think my internet went out.
Oh, sorry. Yeah, no. Well, you know what? We'll blame Elon Musk for X Spaces or Nikita. But if Nikita is listening, that he should try and fix some of the audio challenges that we always run into. But no, what I was getting at is like, the businesses are using your Easy
Yeah.
for payments. And behind that, you guys create a stable coin like infrastructure that allows for them to capture the yield. How does that economics sort of become more retail oriented? How can a business like ours, which is a heavily regulated institution that is dealing with US dollars, that is dealing with KYC AML, that is dealing with USDC, how does one business like ours want to interact with Easy? And more importantly, is there a pathway you see for retail folks that are interacting with merchants to use your own stable coin? And maybe the word stable coin is the wrong terminology here.
Yeah, I mean, I think like just thinking about, how we would like be able to integrate, say, for instance, with like an Alpha Ledger, right? Like we're always looking for ourselves, we're always looking at different ways to aggregate yield, right? So whether it's using these awesome products that like you guys put out, right? With like the T12 fund, right? And creating yield aggregation strategies along these alternative yielding strategies, or, I mean, I think there's a lot of cool things about starting with businesses. You know, Consumer is a completely different market. There's other regulations and stuff that we have to kind of worry about on that side. But I think that if you start with business and you start with business accounts and start getting these places that all these consumers are purchasing at all the time, you have a really interesting distribution network to launch a consumer product later. So, if we are in, X number of stores that this consumer is purchasing, and you create some sort of campaigns along this solution and launch a consumer play. I think you have a natural audience there that would be willing to take the benefits of that, right? You can do really interesting things along like cashback programs or rewards or any of these programs that you've seen that are for customer experience and giving cashback or any of these things. A lot of those are based off of trying to save on these interchange rates. So if you're able to create a decentralized system that makes that cost next to nothing, then what type of rewards can you give that customer to encourage them to come back? So I think there's some really interesting things that you can do in the future with that. It's just a matter of staying within the lines of the compliance and regulation.
Fair point. So Nico, I mean, just piggybacking off Andrew's comment, where do you see all of this evolving over the course of next 2 years? Let's just say, what does the roadmap for Easy look like, and what improvement in the infrastructure that you really hope to achieve over the course of, let's assume, call it 6 to 8 months?
Yeah. Our long-term goal, I would say, to your first part of your question, over the next like 2 years, minimum, our long-term goal is basically to move as much commerce as we can on chain and to uh, create as much commerce that is powered by stablecoin based payment rails, ideally through Easy USD, but as much commerce as possible through stablecoin based payment rails. In the short term, we've got some interesting stuff coming out at Breakpoint that I do not want to prematurely advertise here. I would just say come see us at Breakpoint. But I guess the long term vision of this, Manish, and where we're going with this is that what Andrew and I had a conversation early into the construction of Easy, and basically that it's centered around this idea that the more stablecoins are used in transactions and the more efficiencies are um, gained from any of these DeFi tools or stablecoin products, the reality of the situation is that the cost of a transaction trends towards zero. So we asked ourselves this question of, okay, if we think that everything is going to become stablecoin based payments and the costs of all payments are going to trend to zero, then what's the point of creating a payment processor? Like it's almost a nonsensical suggestion to be making a company in this space if we think that the fair market value for the underlying revenue generation it goes to zero. So for us, our kind of North Star slash Holy Grail of everything that we're building lies with the underlying data of the transactions and the systems that are getting built on our platform and in our merchant ecosystem. We will be launching a token incentivized opt in system to allow merchants to be able to tag and validate data of theirs that we ask for when it comes to their back of house operations, when it comes to their inventory, when it comes to tagging metadata on products and validating that it's actually real. When we don't want merchants on our platform, let's just use the quintessential crypto coffee shop example. We don't want merchants on our platform that like would run a coffee shop to just lazily go onto their POS system and write large coffee, right? I want to know everything about that transaction. I want to know where the bean came from. I want to know what roast it was. I want to know how many ounces are in your large coffee. I want to know who the distributor was. I want to know who the roaster was. I want to know all of this information because if I can aggregate that information from 1,000, 5,000, 10,000 different customers and map out the ways that commerce is working between not just your business, but all the different businesses inside of this platform, I can use it to help you as a business. I can use it to help you improve the way that you do your operations and give you visualizations and analytics onto how you can improve your business. But B, I can now take that data as granular as it is and as real time as it is, and I can give another monetary benefit by like expanding the value of the ecosystem. I can assess, what's your dynamic credit risk of you as an individual merchant as compared to everybody else on the chain? What's your account payable, account receivable days, and how does it compare, and how do we improve that? What's your financing needs on a specific product or on a specific flow within your company? How can we connect you to third-party financing partners and to assess what your ability to pay and your ability to pay back is based off of all your other interactions inside of our ecosystem? Um, how can we help you to uh, control the information that you have in your business, to choose if you want to share it or not, and to have true data ownership such that we can value your information and your data and your utility to our ecosystem and pay you back as to what you're worth to the wider ecosystem, but also give you a direct benefit for providing the data that nobody else asks you your permission for. They just take from you. And so you're not incentivized to give the best data. We really think that long term, um, what we're building here is a bit of a Trojan horse, where it's payments processing is the horse to get us in to a merchant's like operational stack and to improve their entire business. But then the soldiers inside said horse are the data components that allow us to give data sovereignty and information sovereignty back to these merchants in a quantifiable way.
That, my friend, is incredible, right? I mean, the data lineage, the provenance of the product, that's the holy grail. I mean, if payments can solve that, and you guys are clearly working towards that, to me, that is where the rubber meets the road. That's where you can
Manish,
remove the friction.
one example I wanted to give on that, and I mean, this might speak to you owing to your background as well, is that even something like an invoice, right? Traditional invoicing between merchants, let alone like industries, is an extremely archaic system, even if it's done over like modern rails or payment rails, to the point that like in the US, invoice factoring, the buying and purchasing and sale and selling of merchant invoices is a $2 trillion industry.
Sure.
But the spread on those invoices is tremendous because there's no way to really dynamically assess what is a merchant's credit risk and credit rating based off of all their other actions. There's no way to have a zero trust, like low spread on anything like an invoice factoring product. I would love to build an invoice factoring product. We're talking to a couple teams in this space about doing that and potentially launching such a thing in 2026. But that, even just like as a low hanging fruit, of a benefit that like stablecoin based payments and blockchain based payments unlock is literally being able to do that.
Yeah, no, I mean, look, I mean, I think there's so much friction in the current payment system. You guys clearly know this better than I do, but that's where the cost is, right? The cost is in the friction, not in the movement of the physical cash, right?
Yeah,
So I mean, even today, like the US dollars move on wires, they don't really physically move the dollar unless you're going to the ATM.
exactly.
Less people are doing that. So this is incredible, guys. I mean, first, thank you both for coming on and educating me, especially on the fact that you cannot own a bank account. It's not a birthright. I mean, it's sort of lost on people. And the work that you guys are doing is foundational to everything that is composable money. So congratulations on all the work that you guys have done thus far, and good luck with the next step. And I'm looking forward to sort of keeping track of where you guys end up before breaking it.
Thanks, man.
Thanks,
Appreciate
Ganesh.
it.